Stock investing and option trading. My portfolio is up 27% over and 110,000 year to date, so within 6 months. And today we're going to talk about what happened last week in the stock market and also 6 companies that's going to be reported earnings this week and which ones are my favorites. I'm going to make some prediction about stock market. And welcome to World Traveling Millionaire Stock Investor and Option Trader channel. So year to date is up 27.81%. Right here on April 4th, my portfolio is down below 50,000. So you could say it's down half, but it doesn't matter. As long as you own great companies, there's nothing to be worried about. My portfolio recovered again and become really up 28% this year to date. And breaking news, this is what US used to attack Iran. This is the plan. And of course there's a retaliations and stuff like that. But how about war? Should we be worried about the war? Not necessarily. I'm going to tell you why. And S&P 500 down the past 5 days 0.55%, and US strike Iran over the weekend, right? But today, you see, today is up. Stock market is up. Yeah, it wanted to go down a little bit, but nothing crazy. It opened positive, then down a little bit, then positive, went up, down, then recover, positive again. Nasdaq, the past 5 years, they not move. The past 5 days, they not move at all. But today, Nasdaq, look at it, 0.94%. It's up, 0.94%. Right after US strike Iran, right? And also Iran retaliated. But it didn't matter. The past 5 days, last week, it was down 0.8%. But today, let's look at it, up 0.89%. War doesn't matter because it was expected. The conflict was expected, but it's not World War III. Okay. Of course, if something happened tomorrow, just like that, nobody expected it, the stock market could crash a little bit. I would say 3%, 4%. That would be normal. Probably over the next few weeks, it may crash. Then after that, it may recover again. Right? Of course, if there is a nuclear war, everybody dies. Don't worry about it, okay? Money is no use. No matter how much you have, it's no use. But if there is a war, but it's not a nuclear war, and the stock will recover. So what should we do? We should just DCA. DCA, just hold whatever it is. We will never be in time to get out. Look at it. Tariff happened. I did not get out. Right? Even I could not get out. Warren Buffett could not get out, whatever. Of course, he sold lots of stuff because he's going to retire. It's just part of his retirement strategy. But nobody can get out, even if you expected it. Yeah, some things happen. So the best strategy is just hold on to great companies and DCA because there is a war. Let's say in Iran, Middle East. But Apple stores are all over the world, in Australia and New Zealand. Apple stores are there, so they are still doing business. So it really doesn't matter even if there was a war. So let's look at ACN. Last week, it was down 6.86% after earnings report. Okay, the past 5 days, it's down 9.53%, 6.47%. Today is up. ACN is up. So what we could do is we could basically do some call option, right? Call option or DCA if you already own the stock. I probably prefer to do DCA and also I prefer to sell put option. So if the stock price move up, that's good. I get paid free premium. And I only use a little capital for the call option. And Kroger, it jumped 9.96%. Why? Because more shoppers coming into the store because of tariff. People don't want to eat out anymore. They want to save money. They cook at home, so they shop at the grocery store. And also, Kroger shut down stores to cut costs. So that really helped, right? You see, so many companies are cutting employees. Amazon, they lay off. Microsoft, they lay off. Meta, they lay off because of AI. So the only solution for your future is stop investing, call option, put option, advanced option. Because if you own companies like Nvidia or ACN or any companies, right, that's gonna be beneficiary of AI, you don't have to worry about your living, right? Because you're not employees, you are the boss. So that's why I like buying companies and investing in companies. Next one, DRN, Dada Restaurant. Okay, Dada Restaurant, DRN, over the past 5 days, it's up 3.60%. And so today it's down 1.92%. Yeah, not bad. After the earnings support, it's up. Carmex 6.59%. After the earnings support, that's quite surprising because Carmex reports good earnings, but it's just before tariff, right? People buy lots of used car because they are afraid that the price is gonna go up, so that's why their earnings pop up. But personally, I don't want to buy Carmex because there could be some losses in futures. So as that's not a business that I'm really interested in, so I don't buy it. So what's gonna be happening this week? So new home sales, Tuesday. GDP is gonna be on Thursday, and Friday will be interesting. PCE, core PCE. If it's better than expected, then the stock market could jump. But no, whatever it is, I think it's really important that Fed gonna be cutting interest rate in July, which could be good news. And the war could be de-escalating. The war is not that big of a concern. Okay, it doesn't really impact stock market so much. So which stock gonna be reporting earnings this week? KB Homes year-to-date down 19.94%. Over the past 5 years, down. It's up 81.07%. So, but I personally prefer not to buy home or construction company unless they go down a lot. So no, I'm not going to buy KB Homes. And homes are not selling as well as this year. So it could go down after the annual report. That would be interesting to see how it's gonna be like. So yeah, FedEx year-to-date down 70.59%. 5 years 72.77%. This could be good for dividend, but this may not be good for retirement because their stock price fluctuate quite a lot. So you don't want to be retiring and look at this. Your portfolio goes up and down like crazy. No, so this is a good company in my opinion, but I'm not going to buy FedEx because the fuel costs fluctuate and labor can be expensive. They do not have so much control over their costs. And next one, I love traveling on a cruise. Carnival Cruise year-to-date at 4.96%. 5 year it doesn't beat S&P 500, so I'm not going to buy. Okay, S&P 500 the past 5 years, look at this, 100%. Yeah, 2 times. So no, not going to buy. MU is up year-to-date 41.53%. 5 year it beat S&P 500, but I'm not going to buy MU. Do you know why? Because its chips are a commodity. Because one, in 2016 the chip prices crashed, the MU price stock also went up. Look at this, went up, then after that it went down. Like crazy. Look at this. So they do not have so much pricing power. So I don't want to buy companies that do not have so much pricing power. So yeah, it used to be 64 in April 4th. Yeah. Next one, PAYX. Year-to-date up 7.67%. 5 year it beat S&P 500. This could be good for retirement because this is a paycheck. It's basically like ADP. You have a business, you have a company, you want to hire payroll, You can use paycheck. One good thing about this business is that it's sticky. Once a company sign up your service, they rarely switch to another service, right? Because they need to switch everybody to another service. It can be quite sticky. So that's why I like it. It also paid 2.9%. Not bad dividend. 5 years it's beat S&P 500 as well. So yeah, you could look at it. This is not financial advice. I'm just telling you what I like, what I'm thinking. So next one, Nike. Year to date down 18.84%. I used to like it, but I sold it at the top and got out just before it crashed. They are having lots of issue. The past 5 years is losing money, 35.1%. So I'm not going to buy Nike. Yeah. So I used to like it, but I don't want to be in a retail business. So that's why I quit it. So which one do I like the most? I would say Paycheck and probably FedEx and MU. Yeah, that's about it. So which stock do you like? Comment down below. If you want to learn more and also want to gain 28.5% year to date, just like me, you can subscribe to this channel, Master Risk Stock Option, and the link is gonna be in the description down below. If you want to open an account, get a free stock. If you want to talk to me, the link is gonna be in the description comment down below. Share, subscribe. I will see you in the next video. Bye bye.